If you look online at what's happening to the Maryland real estate market right now, you're most likely going to see headlines like these: DC house prices plunge amid DOGE turmoil, and Trump's DOGE could lead to a regional recession for housing. And even worse, there have been TikTok posts stating that there have been an influx of listings on the DC market, showing photos of the most houses they've ever seen listed all at once, showing charts and graphs saying that there's basically a housing crash happening in the DC metro region. So is all of this true? Well, that's what we're going to cover in this video. So let's just dive right into it. And one thing I want to point out before we actually look at the numbers is that we're going to take a measured approach to this. We're not going to have a fearful approach and believe all the stories. And we're also not going to blow off the severity of people losing their jobs in the DC region, which is absolutely happening. But what I want to do is show you what's actually happening in the housing market so you can make an informed decision if you're considering a move here or if you're considering selling here. It's very important to know what's happening. And by the end of this video, you're going to have all the information you need. According to the Bureau of Labor and Statistics, 14% of Maryland's labor force is federal workers and federal contractors. So that's a significant portion of people that are living in this state, especially with the return to work order that's happened. Most of those people are living in Maryland or the immediate DC region. So in this video, the first thing we're going to cover is actually where the highest concentration of federal employees are in the state of Maryland. Then we're going to go into the Redfin data, and then we're going to cover what I'm actually seeing boots on the ground in the market right now. So let's head over to my desktop so I can show you everything that you need to know about what's going on. All right, so we're going to look at the federal jobs by county. And it's interesting because the county that has the highest population or highest concentration of federal employees in their workforce is not even close to DC. It's down here, St. Mary's County. And that's interesting because it is 2 counties away or removed from DC. And you have to ask yourself, well, why is that? Well, it's because Naval Air Station Patuxent River is down here in St. Mary's County. And because of that, most of them are directly supporting the military and the Air Force. So I would say they're at a little less risk of losing their jobs. But if they did, 89 workers per 1,000 is a lot in this county. So there could be a major impact on not only the housing market, but the local economy as well. So I don't think the impact will be as large there as other areas, but it is still something to consider. I think everyone was surprised that St. Mary's County was the one with the highest concentration. Now, a county that does have the second highest concentration and could see a major impact is Montgomery County. They have 46 federal workers per 1,000. Now, it's less than half of St. Mary's, but these federal employees are across many government agencies. And the interesting thing about Montgomery County is how many federal government agencies there are. There are 18 headquarters of federal government agencies in Montgomery County and 36 federally funded labs. That's a big deal. We know for sure that there's going to be a lot of cuts in Montgomery County. We're talking about 48,000 federal jobs. That is significant. So if we're looking at anywhere for major cuts and major impact, we're looking at Montgomery County. Now, Frederick County to the north, you have 16 per 1,000. You have 4,700 jobs. Most of the jobs there, or most of the economy there, is not going to be impacted. So not as huge of a deal. Now let's move on to the third highest, which is Harford County at 43 per 1,000. They have 11,000 total federal jobs here. Now, most of this is due to the Aberdeen Proving Ground. So again, that's direct support to the military. I don't think you will see as big of an impact in that area. I think we should be focusing right around DC here, down to even Prince George's County. All these people in Prince George's and Montgomery and even Anne Arundel, they're directly working in DC, around DC, for the federal government across a variety of these contractors and government agencies. So we could see a major impact there. Now, what are we seeing already? Well, I think we have to go over to the Redfin data. I love using this data because it's week by week. And right now, our data is up to date as of the 9th. So we're about 5 days behind at the recording of this video, not too far off. Now, I'm going to keep all 4 years on here for this at first so we can go over the data and really show what's happening. Now, new listings is what we're starting off with. If you look there, we are up 11.4% in new listings year over year, with 1,370 in the DC metro region. This includes Maryland. This includes Frederick. So that's the area we're talking about. Now, we're still down from 2022 significantly, right? But year over year, there is this trend that we're seeing. And not only that, it looks like we're maybe straying away from seasonal trend. We need a couple of weeks to really tell if we're following along. If we start breaking upward, then that's when I'm going to start sounding the alarm that inventory is increasing. I'm just not quite there yet because we're still along this seasonal trend. Now, pending sales are really important to talk about. We're down 10.7%. To me, this means the buyers are cooling off. There's just not as many in the market buying up these houses. Inventory is increasing. So yeah, 10.7% down in pending sales is significant to talk about. And another way to look at this is homes that are off market in 2 weeks. Now, compared to 2024, we're down 6%. So homes are not selling as quickly. And that's also an indicator that the market is cooling here. Now, we still have enough inventory, which we'll talk about in a second, where I think there's a great balance right now. I actually love this market that we're in for various reasons, but we are down 6%. That's something that's very important. Now, really quickly, let's over to median sales price before we get into the inventory again. Median sales price, look at this. We're up 5% year over year, despite rising inventory. How do you explain that, right? Well, there's still enough buyers in the market, enough people moving here, and just enough competition to still drive that healthy appreciation that we're seeing. So median price point, 5%. We're at 567,000 for the DC metro region. People are still paying it. People are still not even flinching. I'm seeing a lot of people buying cash in the area as well. So it's something to consider. Regardless of federal jobs, there are a lot of people buying here that are not a part of the federal government, or they just don't think their jobs are going to be impacted. So that's something to consider. Now, let's head over to active listings on the market. We are up 10.18% with active listings year over year. So again, more inventory, which we need. Even going back to 2018, 2017, it was very common for buyers to go out and look at 3 to 5 houses in the same town on the same day. And now you maybe look at 2, maybe 3. And it's not so fun if you're a buyer. So that inventory seems like it's increasing, but it's still not to the point that you really want it to have a ton of great options. I think we're just reaching that balance point where it's great on both sides as a seller and a buyer. So looking at median days on market next, we are up 2.1 days on market, not percent, 2.1 days on market year over year. Not too big, not too worrisome. We're still following seasonal trends there, something I'm going to track that we need to talk about. And the last thing is the months of supply. This is something that will determine whether or not we shift into a buyer's market. I still think we're just over in a seller's market, a little more balanced than we've been in the past 5 years, which is great, maybe even 6 or 7 years actually. But we have 11.5 weeks of supply in the DC metro, and that's important. That means that we have just under 3 months of supply. That's how long it would take if no new houses hit the market to sell what's currently on the market. That's healthy. That's great. We don't want to see that spike up above 16, right? We don't want to see it too high. I think that's getting into a range where, there's almost so much on the market that you can't decide, but we're in a pretty good place. Seeing a little more would be good for us. Now, I think this data is really important to track because anytime you see breakaway from seasonal trends without a major black swan event like COVID, that's something to pay attention to. This right here, it's enough of the breakaway where I'm paying attention, and especially when we're talking about the new listings. If I start to see a significant breakaway there, I'm going to be hopping on again to talk about this. So these are all things that we need to consider when buying or selling in Maryland, and we'll be closely tracking it over the weeks to come. All right, so we just went over the Redfin data, but what's actually happening in the market that I'm seeing with my own boots on the ground? Well, one thing I'm seeing is that buyers are having an easier time securing properties right now. With the influx of inventory, there is less competition in the market, and we are still seeing multiple offer situations. If it's a beautiful house that's listed at an appropriate price, you might see a handful of offers, maybe 2 to 3 offers, but nothing like we were seeing in years past with 10 to 20 offers on a property. So with that means my buyers are having a lot more luck getting better terms. That means having a lot more inspections and getting things repaired and replaced in these inspection periods. So that's a great thing for buyers. Now, on the seller side, I say this in every video, regardless of market, that pricing is everything. And I am still seeing people overprice their homes. And for the life of me, I cannot understand why so many are doing it, because it is really shooting themselves in the foot. So many are listing 25 or 30 or 40,000 over what they should be listing at, and therefore buyers are not getting excited to see the property. And you have to think about this. Buyers right now in this market are not excited. They're moving because they have to, or they really need to relocate for work, and they're not excited about high 6% and even 7% interest rates. So you as a seller have to get them excited with your price point. And this applies to a lot of areas around the country. If you're watching from places in California, the same things apply. Any area where there's a cooling in the market, you can't price at the high end of your price point. And that's what I'm seeing here. But the sellers that are successful, getting top dollar, are pricing just under market, even a lot under market, to get people in the door and drive it back up. So that's something to consider. And I think the reason that we saw that median price point increase 5% year over year is because even just one or two people competing for a property will drive up that price here in Maryland. So that is something to consider, that the price point is still going up. Now, how sustainable is that if we have huge job cuts? I'm not quite sure. We'll have to see if that can sustain. Now, if interest rates drop, they could stay up. That could bring in even more buyers into the market, and those price points could continue to rise. In Maryland, we see 3 to 5% appreciation year over year. That's healthy appreciation here. So it could continue on. But the biggest thing to note right now with all these changes in the federal government is that this is an evolving situation. Although we haven't seen major changes just yet in the market, we see signs. Although we've seen those, there is so much that can still happen. So I'm committing to bringing you up-to-date information on what's happening in the market based around these cuts to the federal government. It is so important right now if you're considering moving here. So I'm going to be doing more of these videos more frequently so you can stay up to date on what's happening in the market. Now, if you are considering a move here and you're not sure where to move, the top neighborhoods, the best places to be, that's exactly what I'm here for, and it's exactly what my channel is here for as well. I make videos on the top places to live in this region. So if you haven't already checked out the rest of my channel, go ahead and do that now. And if you know for sure you're going to make a move here, make sure to go down in the link in the description and schedule a one-on-one consultation with me. Whether that's 2 weeks away or 2 years away, it's never too soon to get a plan together so that your move goes as smoothly as possible. And as always, if you like this video, make sure to like and subscribe so you stay up to date on all my videos about moving to Maryland.